GBP gains hold ahead of general election. The Great British Pound looks relatively robust in spite of this being the eve of the UK general election. In the interbank market, the pound is just below USD 1.27 and just above Euro 1.18. Whether the pound will manage to remain there for the rest of the day is a moot point at this stage. Aside from the UK election and preparations for the second round of the French election, purchasing manager indices are the headline acts on both sides of the English Channel. The markets are expecting slightly softer data on all fronts, and if that is the case, we are likely to see further range trading in GBP Euro rate. The GBP USD rate has a little more on its plate, and that is covered below. It's very hard to discern the likely outcome of the UK election, other than it would appear the Labour Party is likely to have an overall majority. As they are traditionally a party of high spending, that may give the pound some strength. The makeup of the vote for the other parties will be the most interesting part. The most pressing question here is just how badly the Conservative vote has imploded and who will fill that void. US employment data and Independence Day headlines. The US financial markets will close for the Independence Day holiday tomorrow. As a result, the weekly job loss claims numbers have been brought forward today. We are likely to see a slight rise in the numbers of fresh claims and the ongoing claimants, and that data coincides with the release of purchasing manager indices for the service sector. By way of contrast, the corresponding European data, the markets are expecting slightly stronger numbers from the US. If that is correct, coming on the day before a US public holiday and after a few days of US dollar weakness, that may well strengthen the dollar in later trades. Later on, we will see the minutes from the last Federal Reserve Open Market Committee meeting. Every word will be scrutinized for hints of when the Federal Reserve is likely to start cutting interest rates, even though many believe that will not be this calendar year. Yen weakens on poor service sector activity. The Japanese yen continues to weaken. The GBP JYP rate posted yet another 16-year high overnight on the back of the first slowdown in Japanese service sector activity in 2 years, as shown by the Purchasing Manager Index, which dropped from 53.8 in May to just 49.4 in June. That is below the 50 level, the divider between growth and contraction in the sector. The GBP JPY rate is still up at JPY 205.40 this morning, and the USD JPY rate is even more dramatic at JPY 161.80. This pair is hitting the highest level since mid-1986. Traders are still expecting the Bank of Japan to weigh in with yen purchases to stem the tide against their currencies, but a weaker yen does aid Japan's exporters, so that may not be their only option.